Are you ready to master your finances and achieve financial freedom? Explore the world of financial prudence with us. Ever wondered how some millennials effortlessly navigate the complex world of finance while building their dreams? Curious about the secrets behind managing student loan debt without breaking a sweat? Eager to discover the art of seamlessly balancing freelancing gigs and side hustles for that extra income? Pondering over the age-old dilemma, is it smarter to rent or buy your dream home? And hey, are you ready to embrace the power of cutting-edge savings and investment apps that fit right in your pocket? Well, buckle up, because we're about to embark on a thrilling journey into the heart of financial prudence. Join us as we unravel the mysteries of managing student loans, building robust emergency funds, and thriving in the gig economy. Ever wondered how to decode the intricate language of health insurance and benefits, ensuring you stay financially secure, even in the face of unexpected medical expenses? And speaking of big life decisions, we'll guide you through the exciting world of real estate, helping you make the right choice between renting and buying your dream abode. But wait, there's more. Get ready to explore the game-changing realm of savings and investment apps, where technology meets finance, providing you with the tools to grow your money effortlessly. So, are you prepared to take your financial journey to new heights? Are you ready to transform your financial dreams into tangible realities? If the answer is a resounding yes, then you're in the right place. Let's dive deep into the world of financial prudence, where smart choices pave the way for a future of financial freedom and endless possibilities. Ready, set, let's get financially savvy together. Managing student loan debt, strategies for repayment and consolidation. For many millennials, student loan debt is a significant financial burden that affects their ability to achieve other life goals, such as buying a home or saving for retirement. Understanding how to manage student loan debt is crucial for financial prudence. One strategy often employed is exploring different repayment options, payment amount. However, it's essential to note that while consolidation can make payments more manageable, it might result in paying more interest over the life of the loan. Therefore, careful consideration is necessary to weigh the pros and cons before opting for consolidation. Building an emergency fund, importance and practical tips. Establishing an emergency fund is a cornerstone of financial prudence, especially for millennials navigating the uncertainties of the job market and unexpected expenses. An emergency fund acts as a financial safety net, providing a cushion against unexpected events like medical emergencies, car repairs, or sudden job loss. Its importance lies in offering peace of mind and preventing individuals from falling into debt when faced with unplanned financial challenges. Practical tips for building an emergency fund often begin with budgeting. By tracking income and expenses, individuals can identify areas where they can cut back and allocate funds toward savings. Creating a separate savings account dedicated to the emergency fund helps to prevent impulsive spending and ensures that the money is specifically reserved for unforeseen circumstances. Financial experts recommend setting a goal for the emergency fund, typically equivalent to 3 to 6 months' worth of living expenses. This benchmark provides a reasonable buffer to cover essential costs if a sudden financial crisis arises. To accelerate the fund's growth, consider redirecting windfalls like tax refunds or work bonuses directly into the emergency fund. Furthermore, adopting a frugal lifestyle can significantly contribute to fund accumulation. Cooking at home, canceling unused subscriptions, and finding affordable entertainment options are practical ways to save money. Additionally, consider automating contributions to the emergency fund each month, treating it as a non-negotiable expense, similar to utility bills or rent payments. This approach ensures consistent savings and builds financial discipline over time. Incorporating these strategies empowers millennials to manage their student loan debt effectively and build a robust emergency fund. Writing, programming, or digital marketing. Freelancing provides opportunities to monetize expertise flexibly. Side hustles, on the other hand, involve pursuing passion projects or turning hobbies into profitable ventures. This might include creating handmade crafts to sell online, starting a small online business, or even monetizing a blog or YouTube channel. Side hustles not only offer financial benefits, but also allow individuals to explore their passions and creativity while earning extra income. The gig economy not only provides financial advantages, but also promotes the development of essential skills such as time management, communication, and marketing. It encourages individuals to become entrepreneurs, managing their businesses and finances independently. Moreover, gig work offers the flexibility to balance multiple income streams, providing a safety net in case one source of income fluctuates. Navigating health insurance and benefits. Understanding coverage and costs. Understanding health insurance is vital for millennials, especially considering the rising costs of medical care. Millennials often rely on employer-provided health insurance, which requires a deep understanding of the coverage and associated costs. Deductibles, co-payments, and premiums are essential terms to comprehend when evaluating health insurance plans. Moreover, millennials should be aware of the importance of preventive care, which can save substantial costs in the long run by detecting health issues early. Taking advantage of free preventive services offered by health insurance plans can lead to early diagnosis and effective management of potential health concerns. Aside from health insurance, employer benefits like retirement plans and health savings accounts (SHAs) play a crucial role in financial planning. Contributing to retirement plans, such as a 401k, enables millennials to build a nest egg for the future, often with employer matching contributions. SHAs, on the other hand, allow individuals to save pre-tax dollars for qualified medical expenses, providing a tax-efficient way to manage healthcare costs. Furthermore, understanding the network of healthcare providers within an insurance plan is essential. Staying within the network for medical services ensures lower out-of-pocket costs, making health or buy a home. Each option comes with its set of advantages and challenges. Renting offers flexibility, allowing individuals to relocate without the burden of selling a property. It also typically includes fewer responsibilities, as landlords are responsible for maintenance and repairs. However, renting means that the monthly payments do not contribute to building equity, and rent costs might increase over time. On the other hand, buying a home builds equity and offers the potential for long-term financial growth. Mortgage payments contribute to ownership, and the property's value may appreciate over the years, leading to potential profits upon resale. Homeownership also provides stability and the freedom to customize the living space according to personal preferences. However, it comes with significant upfront costs, such as a down payment, closing costs, property taxes, and maintenance expenses. To make an informed decision, millennials should consider their financial goals, stability, and lifestyle preferences. Calculating the total costs of homeownership, including mortgage payments, insurance, property taxes, and maintenance, helps assess affordability. Comparing these costs with rental expenses provides a clearer picture of the financial implications of each choice. Additionally, millennials should factor in the housing market conditions and trends in their area. Researching the local real estate market can provide insights into whether home prices are rising or falling, helping individuals make a strategic decision about the timing of a purchase. Considering the length of stay in a particular area is also crucial. If one plans to move within a few years, renting might be a more practical choice, whereas buying makes sense for those planning long-term residency. Savings and investment apps, leveraging technology for financial growth. In the digital age, technology has revolutionized personal finance, offering a plethora of savings and investment apps tailored to millennials' needs. These apps provide user-friendly interfaces and innovative features, making financial management accessible and convenient. Automated savings apps, such as Acorns and Digit, help users save spare change or set aside small amounts of money regularly. These micro-savings gradually accumulate, forming a substantial emergency fund or investment capital over time. Robo-advisors, like Betterment and Wealthfront, are investment platforms that use algorithms to create and manage diversified portfolios based on users' understanding of investing, helping them make informed decisions. Additionally, many apps offer goal-based investing, allowing users to set specific financial objectives such as buying a home, starting a business, or retiring early. The app then creates a customized investment plan tailored to achieve these goals. Moreover, these apps prioritize security, employing advanced encryption and authentication measures to protect users' sensitive information and transactions. Regular updates and improvements ensure that users have access to the latest features and investment opportunities, enhancing their overall experience. By leveraging these technology-driven financial tools, millennials can automate savings, invest efficiently, and enhance their financial literacy. These apps empower individuals to take control of their financial futures, fostering a sense of confidence and prudence in their financial decisions. Empower your financial future today. Your journey to financial prudence starts now. As we wrap up this insightful exploration into the realms of financial prudence, remember that your financial journey is uniquely yours. Armed with knowledge about managing student loan debt, building emergency funds, and making informed decisions in the gig economy, you're now equipped with the tools to navigate the challenges of today's fast-paced world. Whether you're considering the stability of renting versus the potential of homeownership, or delving into the convenience of cutting-edge savings and investment apps, you're on the path to financial empowerment. The choices you make today will shape your tomorrow. Don't forget, the key lies in staying curious, being proactive, and continuously educating yourself about the ever-changing landscape of personal finance. Keep asking questions, seeking advice, and exploring new opportunities. Your financial journey doesn't end here. It's an ongoing adventure filled with possibilities. So, go ahead, apply what you've learned, and embark on your financial adventure with confidence. Whether you're saving for your dream vacation, investing in your passion project, or planning for a comfortable retirement, remember that financial prudence isn't just about numbers. It's about empowering your dreams. Thank you for joining us on this journey. May your financial future be as bright as your aspirations. Here's to a life of financial freedom, smart choices, and endless opportunities.